everybody. This is Michael Clark with MB Clark Companies, and I'm here to talk about how to make this whole life insurance stuff a little bit easier to understand. It can be very complicated, and there's a lot of different options out there. So let me break it down to some of the two most basic forms of life insurance that you can purchase. There's what's called term life insurance. Another one is more commonly referred to as whole life insurance. They're very basic in nature, but one is a little more expensive and one may be a little better fitting your needs. So let's talk about term life insurance first. Of the two, this is the least expensive. Term life insurance is something that when you purchase it, it's set over a defined time frame of usually like 10 years, 20 years, 30 years or so. When you purchase it, at the time of purchase, your rate is locked in and is fixed over that time period, whether it's 10 years, 20 years, or 30 years. And unfortunately, if something happens and you pass during that time, the policy only has a death benefit, which means that if you outlive the policy, there is no value to the policy. You only get money in that untragic time when you pass and your loved ones would get that money for you. A whole life policy is very different. This is going to be more expensive than the term life policy. This is a policy that isn't really set up on a 10-year, 20-year, or 30-year. It is set up basically at the time you purchase it, and depending on the company, will go up to age 70, and in some cases up to age 100. Like term life, when you purchase it, the rates are fixed every month, but the difference is in this policy, it's building something called a cash value over time. If you outlive your policy, then whatever that cash value is that you purchase, you get. So for example, if you buy a $100,000 whole life policy between now and age 70, and you turn 70 and you haven't died, you will have $100,000 value in that policy. Also, during the time frame, as you're going along pace by pace, if you need money from that policy, if you want to take money out of that policy, whatever the cash value it's at, you can surrender that value and take it out of the policy to get that cash. You may need it for an emergency situation. Maybe you need to buy a new car or down payment on a house or something like that, but you can pull that out. Or you can use it as collateral and borrow against it because it has a cash value in it. So there you go. Term life, whole life. Depends on what your situation is. Very basic in nature, very easy, but it's something that you should all make sure you pay attention to because you're going to need help in that unfortunate situation and your loved ones will be taken care of. So remember, expect the unexpected, prepare for the worst, and let us help you.